So credit is important in the mortgage process. And what I mean by that is the earlier you get pre-approved, the more chance we have to correct some things that need to be corrected or tweaked when it comes to credit. So some of the things that people have some misconceptions are about mortgage credit scores. So the credit score that you're seeing on your phone, whether that be from Discover, and they show you a credit score, isn't necessarily what your mortgage credit score is going to be. So all mortgage companies have to use the same algorithm. And unfortunately, usually what you're seeing isn't what the mortgage company sees. So it's very important early on for us to take a peek at your credit. Some of the things that you could do to raise your credit score that would help during the mortgage process would be to pay down some debt. Debt at 30% usually boosts your credit score, so that's always a big help. There are things where you could actually add an authorized user, someone who's had a credit card for a very long time, and you could jump on as an authorized user with that. What I like to tell people is prior to us running your credit, don't do anything. So people think that they need to do everything up front because they want to give me the best picture. And a lot of times I find that people do things that just don't help their situation. For instance, I had a client actually close down a credit card because she didn't want us to see that she had all this outstanding room and availability for credit. And when she did that, she closed down her oldest trade line and tanked her credit score. So anything we need to do to tweak it, we could do even once you're in the pre-approval process. So I'd rather guide you than for you just to be off on your own doing what you think needs to be done. So there's also such a thing as co-signing. People who co-sign, there's sometimes when we could actually take that debt out of your ratios. And that would be a definite conversation between us so that I could help you with that. There's student loans. A lot of people have student loans, but the payments aren't reporting. Well, on the mortgage bank side, we either put in 0.5% of the total balance or 1%. And that depends on what loan program we put you in. So a lot of things come into play. And like I said, the earlier on that we're looking at this credit, the earlier I could help you make sure we have the optimum credit score for when you're finding your house. So if I could give you one piece of advice, it's don't worry so much about running your credit. A lot of times people say to me, if I run my credit, is it going to hurt me in a big way? Is my credit score going to drop? I'm going to say that if we run your credit and you and I have an intelligent conversation, I could put you in a much better place after than you would be by worrying about running that credit score.